Hi, everybody. Good morning. My name is Anthony Volin. I'm the National Vice President of the LGBTQ Real Estate Alliance, and we're super excited to present an amazing educational session for you today. We have a market where almost half of our buyers are made up of first-time home buyers, and today's session is really going to teach all of us all of those, a couple of really cool programs that one of our amazing national sponsors, Freddie Mac, has to offer. So stay tuned for that, and we'll get into that in just a second. First, I just wanted to officially welcome everyone and invite you to our next in-person mixer, which is going to be happening 1 week from now. So it'll be next Wednesday, February 1st at Connie and Ted's in West Hollywood. And we go there every year at the beginning of the year, and they put a fabulous spread of amazing seafood out for us. If you're a member, you'll get a drink ticket. If you're not a member, please join. You can go to realestatealliance.org and join to become a member. It's just $20 a month or $200 for the year, and that will get you in all of our events for free. Last year, we hosted a huge real estate fall carnival, and we plan on bringing that back this year in the fall. So if anyone's interested in being a sponsor for that, we're starting to take sponsorship. So please reach out to me anytime, and we'll start getting you all the details we have for that. And also our next educational section, if you want to just write it down, is going to be Wednesday, March 8th. And it's a super, super timely topic. It'll be at 11 o'clock again. We have this amazing social media expert coming in to talk to us about AI. I mean, that's the big trend right now that everybody's using, and how is it affecting real estate and how can we use that? So it'll be about AI and Snap GPT. Where you're able to, where it just basically will create text and blogs and social media posts for you by just putting in certain keywords. So that'll be on March 8th. So now I'd like to introduce you our new 2023 president of the LA chapter, Rod Pyle.
Hi, good morning, everyone. Rod Pyle, as I always say, Farmers Insurance. And yes, I'm the brand new 2023 chapter president of the Alliance. And a quick plug for the Wednesday, March 8th. I actually had a one-to-one session with the social media maven. I believe her name is Christy. She is amazing. Really, you are going to learn so much. So make sure you really put that on your calendar and join us for that one. And now I'd like to introduce Monica LaCrue from Freddie Mac, where they make homes possible. Monica is the affordable lending manager, mission and community engagement manager. So I'd like to turn it over to Monica, and she's gonna school us on what's happening in the world of finance today. Take it away, Monica.
Thank you so much. So honored to be with all of you guys today. I'm going to share my screen, and we are going to get started on a presentation here today. So, thank you. Honored to be with you guys. Today's webinar is going to cover how energy efficiency renovation products are leading the way for new homeowners. Mortgage readiness, affordability, inventory, aged housing stock are all creating really great challenges for our buyers in today's market. Today, you're going to learn about how Freddie Mac's Choice Renovation and GreenCHOICE mortgages can be used as solutions to reach more home buyers. Like Rod said, my name is Monica LaCrue. I'm affordable lending manager with Freddie Mac, and I'm part of our real estate professional outreach team. So what we do is we reach and work with real estate companies, trade associations, local and real estate boards to educate professionals about our affordable products, tools, and resources. Very honored that you joined us today. I also brought a friend with me. Today, we're joined by FM from our cross-country mortgage. He's going to provide some lender insights on the renovation loans and hopefully dispel some myths around using them in today's market. I want to start a little bit about who Freddie Mac is and why we're important in the housing market. We're chartered by Congress in 1970. We were basically created to keep money flowing to mortgage lenders in support of homeownership and rental housing. We operate on the secondary mortgage market, which means we don't lend money directly to consumers. We buy mortgages from our approved lenders like FM over at Cross Country. And then we pull those mortgages into securities and sell those securities to investors worldwide. Our mission is to promote liquidity, stability, affordability, and equality in housing. We're dedicated to stabilizing communities, expanding credit responsibly, and supporting affordable rental housing. We have three main lines of business: single family, multifamily, and the capital markets. At Freddie Mac, we have an all-for-home approach that focuses on four key pillars that support our industry leadership, and that's through our insights, our education, our mortgage products, and our business solutions. Through our insights, we like to highlight research studies, thought leadership, speaking opportunities, and what everybody loves, our Freddie Mac data, to position our clients and our partners for success. We host educational events and trainings like the one you're participating in today to provide tools and resources to professionals to help prepare buyers for responsible and sustainable homeownership. We also understand that buyers today and in the future are going to have unique needs that require both innovative products and informed advisors like yourselves to guide them. Our products are designed to offer more opportunities for first-time home buyers, the diverse population, as well as low to moderate income buyers. We also know through our business solutions, it takes a broad set of solutions and people across the housing ecosystem to solve for borrower and industry challenges. We're leading the charge in developing forward-thinking services, tools, and solutions to expand access and enhance opportunity. So a little bit about today's market. It's very different than what we were even 6 months or a year ago. And so it's definitely causing a lot more challenges for our buyers today. So just to kind of set the tone for what we're going to talk about, we understand that the lack of affordability and inventory continue to be challenges for current home buyers. There's a limited supply of land, a shortage of skilled labor, increasing material costs. We hear about the supply chain issues all the time. And all of that is contributing to higher prices for homes as well as higher rents. More and more home buyers are leaving urban markets for more affordable areas. And the homes that they're coming across are in a little bit of, some repairs. Also, the cost of housing has left many baby boomers aging in place. And if they're anything like my dad, they're very reluctant to make repairs or updates to their home. We're also seeing more and more natural disasters, and the products that we covered today are really designed to help renovate and repair a property that might have been damaged or might need some resilient upgrades. You know, we live in California, so we definitely have experienced lots of flooding and wildfires in the last couple of years. At Freddie Mac, we offer these loan products to promote renovation and energy efficiency improvements, and we want to introduce those products with you today. They're, again, solutions for these buyers that are having problems in facing the aged housing stock that we see. Just some stats to share with you. According to Harvard's joint study for housing studies, 80% of the nation's 137 million homes are at least 20 years old. That's almost 110 million homes that could benefit from home renovations. Additionally, more than 55 million homes are at least 50 years or older. And then again, they can benefit from a significant renovation. This aged housing stock is creating a remodeling boom. We also see the rise of fixer-upper and flip or flop, all of those HD TV shows, the Property Brothers, all kind of, driving this desire for renovation. Everybody wants to customize their home. They want to add their personal touch, and renovation lending is a great way in order to do that, to add that touch. So we're going to dive into our first product. I want to introduce you to Choice Renovation and Choice Renovation Express. Choice Renovation is new. It's been out on the market for a few years now, and it's really a solution to address that aged housing stock that we're seeing that we just covered, right? It's designed for buyers who are looking for a convenient and cost-saving way to finance their home purchase as well as the renovation costs in a single closing transaction. We know that location is very important for our diverse buyers. And so if they find a home in the neighborhood that they prefer, it might need a little bit of an upgrade in order for them to fit the needs of the current home buyer, what they're facing. Maybe it's an extra bedroom or bathroom or something like that. Renovation is a great way for them to make the home fit their needs. It's also a great solution for millennial home buyers who are looking for more affordable options. And again, they get that chance to kind of customize that home, offer the upgrades and the updates that they're looking to prefer in the home. So It allows renovation costs for less than 75% of the appraised as completed value. So here on this slide, we're seeing a calculation of, a home being, sold for or priced at a 75,000, a cost of improvements at 180,000, total acquisition would be 255,000. It appraises for 250. Allowable then would be 187.5 for the renovation costs. And so again, it can be compared or paired with our low down payment options, Home Possible or Home One. We're putting in as little as 3% down. So if like calculation here, again, every buyer is going to be different. Every situation is going to be different. But in this scenario, the buyer would be paying about a little over 10,000 for their contribution in order to purchase this home. So definitely a great option for a home that needs a little bit of extra love in order to make it livable for the person who's looking to purchase the home. There are, here's, we're seeing some of the renovation eligibilities, proceeds can only be used to finance renovations on an existing dwelling, which means you cannot raise an existing structure or build a completely new one, right? You can't come in, bulldoze it down, and start building a new home. It can't be used for personal property with the exception of new appliances. So if you're looking to make some upgrades on some appliances, it can definitely be used as that. Again, it can be used to pay for resilient upgrades, retaining walls, foundation retrofitting, storm surge barriers that are all going to then add to the resilience of that home, creating additional sustainable home ownership for that buyer. Again, we see in California a lot of different, climate change issues, fires and floods. And so if you are in an area that might have been affected by this, renovation options to make repairs to a home that was damaged during disaster is a great way to, make that home livable again. We were in the market with Choice Renovation for a little while, and we wanted to come up with another solution that was going to be really designed for some small scale renovation financing. And that's when we introduced Choice Renovation Express. We found that most owners were using personal funds, credit cards, home equity loans, are going down to Home Depot to take out that loan in order to make upgrades into their home. So we introduced Choice Renovation as another option again for those small scale renovations. This allows updates for, replacing windows, doors, light roof repairs, painting, and it's, really started to create increasing home values. That's going to adding equity to that homeowner and creating affordable home ownership options for more buyers out there. So might want a home that's going to add a little bit of extra value to them by doing Choice Renovation Express, a smaller scale option for them. It can also be paired with our low down payment Home Possible and Home One mortgages. It's eligible on 1 to 4 unit primary residences, 1 unit second homes, as well as 1 unit investment properties. So definitely great options for those out there in the market that are looking for those small scale renovations. So we're going to turn now to talk about our Green Choice mortgage. At Freddie Mac, we believe that reducing home utility costs places families in a better financial situation and helps preserve the home affordability over time. That's when we introduced Green Choice mortgages to commit financing for energy efficiency home improvements and energy efficient homes, helping more homeowners again attain that home affordability. So let's dive into Green Choice mortgage. Sometimes homeowners don't plan for the increase in expenses that home ownership can bring, right? Utility costs are much greater in a single family home than they are in an apartment. So it's important that the home buyer is prepared to see higher utility costs, whether that be, their home or their water bill, right? I live in an apartment. I don't pay for trash. I don't pay for water. And so these are added expenses that a no homeowner might need to be able to budget and prepare for. One way to keep costs down is to invest in energy efficiency improvements in the home. Green Choice has streamlined the renovation products that finance home energy efficiency improvements to help reduce energy costs and water usage. It lets the homeowner finance a wide range of improvements over the term of the mortgage. And if the improvements are less than 6,500, there is no need for an energy report. This as well can also be paired with Home Possible and allows for a single closing. So again, that 3% down. It applies for both the purchase and no cash out refinance transactions, and can also be paired and used with manufactured homes as long as the improvements do not impact the structure integrity of the property. So definitely something to keep in mind if you are in an area where manufactured homes might be more common in more of the rural areas. So, we want to talk about the improvements, and I'm sure that FM can definitely shine some light on this as well. Basic energy efficiency improvements include programmable thermostats like the Nest. Everybody likes to be able to set that temperature for when they're not home versus when they are home. Solar water heaters, if you want to upgrade your refrigerator, your freezers, all the way down to light bulbs. One of my favorite improvements for those here in California is solar panels. With Green Choice, a home buyer and homeowners can actually finance solar panels for their home. I know this is a hot topic right now with ways of if people are looking to buy, right? If they want to sell their home, some people are shying away from putting those panels on tops of their house because now they've financed this and it has to be sold with the purchase of the home. However, if you are planning to be in the home for, an extended period of time, I think it does add value and is a green option, right? More and more people are being more energy efficient, more cost effective when it comes to it. I think it is going to be somebody who owns their home and will own their home for an extended period of time who's going to find value in adding those solar panels. So if you have a current owner, maybe purchased from you a few years ago that you might want to reach out to and have a conversation about going green, I think this would be a great way if that's going to be their forever home. They might want to consider, adding some solar panels to their home. Last, before we invite FM to join the conversation here, we want to talk a little bit about ADUs. Again, they're very popular here in California. It's another solution to tackle affordability and those inventory challenges. They're growing in popularity. They're a great option for multi-generational households, right? So if you have family members living with you, it allows for the flexibility of close but separate living, right? They have their own bathrooms, their own kitchens. So we're going to talk about what Freddie Mac is doing to make ADUs a little bit more accessible. So let's start first. What is an ADU, right? An ADU can be part of the main home, maybe a covered basement or an addition, maybe above the garage where Fonzie lived, right? It can be a detached structure built on the main home's lot. For Freddie Mac to consider it an ADU, it must include its own kitchen, a separate interest, and a separate bathroom. So those are the three important things that it must have in order for us to be able to consider it an ADU. So we're going to talk about some recent guide changes that we've changed to make allow for more flexibility. And again, I know that we're speaking to some real estate, professionals in the audience. You don't need to become an expert on lending in order for you to be knowledgeable on these products. That's what the lending professional that you choose to work with is there to do, to answer it. What we're trying to do really here is to bring awareness around these products. So that way, if you have, hesitations from some of your buyers who are looking at homes that, all the bathrooms are needing upgrades or, the roof needs repairs and stuff like that, we want to make sure that you have tools and solutions for them when it comes to considering them even looking at the home as an option for them to purchase. So in June of 2022, Freddie Mac expanded our ADU policy. We used to only allow an ADU on a 1-unit property with rental income from the unit was only permitted for a live-in aid or with a Home Possible mortgage. So in June of 2022, we updated our policy to allow for a 1-unit ADU on a 1, 2, or 3-unit property. And we now allow for rental income generated from an ADU on a 1-unit primary residence to be used by the homeowner to qualify. Now, if that is going to be the case, right? If somebody's going to be renting out that ADU and they're going to be using that income in order to qualify for their mortgage, an appraisal is needed. Also, Choice Renovation provides an option to use a no cash out refinance mortgage to pay off a short-term financing from ADU renovations, including maybe an addition or a renovation of an ADU that they currently have on property that might need to be upgraded in order for it to be livable for them to rent it out. So all of that would be completed by the note date. So very important things to consider if you have a buyer who is looking at a property that has more than one unit on it, maybe something for them to consider. Maybe they want to add an ADU to their lot of land that they currently have. Definitely options for them to consider. Here are some requirements. And again, you don't need to be an expert when it comes to understanding what some of these requirements are when using, rental income to qualify the buyer. If it's too much information for you, that's why we have the lending experts in order to answer that. But it's just something that you can put in your knowledge bank. Rental income from an ADU may be considered to help the buyer to qualify if it can only account for up to 30% of the total monthly income that's used. So the buyer still needs to have additional income that they would need to bring to the table, obviously. Work with your lender to figure out these calculations. FM's with us. He's definitely one of the lenders that we work with. And they'll be able to calculate, understand how Freddie Mac calculates the income in order to qualify it for that purchase. Again, rental income that's being used to qualify, appraisal is needed. And the appraisal must be given the description of the ADU and provide a sales comp or a rent comp with the appraisal report. Also, the ADU must comply with all zoning and land use requirements, definitely needed. And then one last thing to note is that at least one of the qualifying borrowers on the mortgage would need to participate in landlord education. Or at least have 1 year of property management or ADU rental management experience. So, and I'm sure there's a lot of resources out there to be able to offer that education in order for them to be able to get that what they need, right? Because we want to make sure that they're qualified in order to rent out that ADU that they have. So now I'm going to invite FM to join us here for a discussion. FM and his team strives to provide exceptional home financing experience for their clients, focus on effective and a commitment to first-class customer service. He's been in the mortgage industry since 2003 and was a business owner for 10 plus years before that. Since 2003, he's worked with realtors and borrowers to fund over $2 billion in mortgages and is proud to be consistently listed as one of the top 1% of loan officers nationally. He works with a wide variety of clients from first-time home buyers to seasoned real estate investors. He's supported by a team of talented industry veterans who work tirelessly and continuously to improve the loan process for their clients and the referral partners. So welcome, FM. Thanks you for joining us today.
Thanks, Monica. I hope all that's true. Where's the fire?
I believe it. So give us a little bit of background on what you've been doing in the industry and how renovation, business has been kind of something that's been something you brought to the table.
Yeah, thanks so much. And thank you for all that you do as well. Freddie Mac has some really unique advantages over some of the other renovation products, and we'll probably touch on that. Renovation loans, when working with our realtor partners, traditionally it's been very challenging to get renovation loans into contract in an extremely hot market when there's multiple offers and everybody wants to close in 14 days. Renovation loans involve getting with the contractor, getting plans together and things like that. So it's a conversation that I have probably 2-3 times a month with potential buyers. And just in the last year, once we saw rates go up and the market cool down a little, we're actually seeing these now go into contract and get offers accepted on renovation deals with longer closing time frames. So this is the right market for this kind of product right now.
Absolutely. Totally agree with you. So as a lender, what are some of the repairs that are eligible for renovation lending? I know I covered a few, but if you can give some firsthand examples of what you've
Yeah.
seen them used as. It would be great.
Yeah. So the important thing for all the agents on this call to remember is that nothing has to be done before close of escrow, right? So a lot of times you'll see a property that's listed that says cash only, contractor special, no loans accepted, things like that. You don't have to do that anymore because you have the renovation loan as a possibility. And you could have something as dilapidated as, one wall standing, fire happened there, like you said, natural disaster, something like that, all the way to something where people lived in it and, elderly couple moved out. They sold the home. They haven't done anything in 40, 50 years to the property. It's livable, but it's just not exactly what our borrowers want, from a contemporary look and feel. So what can you do to the property? You've got to at least, at the bare minimum, bring included in your scope of repairs has to be getting the property to qualify for any kind of health and safety must-have items, right? So you've got to take care of those items. But then in terms of what you can do above and beyond that, this is where Freddie Mac really separates themselves from the competition, because in the renovation world, everybody likes to call these a 203K loan. Well, that's just the FHA product, right? So FHA 203K is a renovation loan. Fannie Mae has a renovation loan. Freddie Mac has the best renovation loan. I'm not just saying that because I'm on this call with you. With Freddie Mac, you not only have to do the mandatory items, you can actually do what are called luxury upgrades as well. You can include heated flooring. You can include a swimming pool. You can include stuff like that that is not allowed under some of the other renovation products that are out there. The ADU not having to be connected to the property is unique to Freddie Mac. A multi-unit property allowing for the renovation loan to be used for ADU, very unique to Freddie Mac. So there's a lot of advantages here in this Freddie product, and really the borrower can choose to do anything they want. So if they're looking at a house that's a little bit broken down, it's not just, okay, let's get a renovation loan and fix the roof. We can fix the roof, we can put in a new kitchen, we can put in heated floors, we can put a swimming pool out back. All of these things can be counted in the renovation loan as long as the value is there after renovation, right? So the way that this calculation works, it kind of confuses a lot of people because it's a weird purchase contract, because a lot of times your loan amount is higher than your purchase price, right? So if you have a house that is for sale, let's say for $600,000, and it needs $300,000 worth of work done to it, right? That total package cost is $900,000. So we can actually go up to 95% of the future appraised value. We do not care what the house appraises for today, right now, sitting there. We take that bid, we give it to an appraiser, and we say, appraise this property as if all of this work has already been done. And as long as that value gives us that minimum 95% loan to value at the end of the day on that combined package, then we've got a deal. And we fund the loan, the borrower leaves, the seller leaves with their $600,000, they get paid. And then the lender hangs on to the remaining funds and doles it out to the contractor as the work gets done after the borrower has purchased the property. So nothing has to be done to the property before the close of escrow.
Awesome. That makes it so much easier to understand. And so what I'm hearing is that, there's no condition requirements for the particular property. It can be as simple as you said, older couple moving out and now they want some upgraded things, to it being partly affected by a lot of the floods that we had.
Yep.
Now people need to come in and kind of clean out all that rotted walls and whatnot in order to make the home a little bit more livable, obviously.
That's right. Everything except for a complete demolition. So you can't do ground up with a renovation loan, but you only have to leave one wall standing, which is just about there. But I've had that scenario before. We had one example. There was a home in the Bay Area, and it was occupied. It was in a residential neighborhood. It was zoned as a 3-bedroom, 2-bath home. Many decades ago, it was purchased and slowly but surely over time converted into a shared office space by 5 psychotherapists. So what used to be a home was now 5 individual offices. Unfortunately, not done with permits. It was just 5 individual offices, no more kitchen, no more shower. It just had a shared bathroom with a toilet in it. So it could not qualify for conventional financing as it stood. And so this house was being put on the market by them. They were all kind of nearing retirement age and exiting the business. And the listing agent actually contacted me to say that these people don't want to sell to a flipper. They don't want to sell to an all cash buyer. They realize that the home isn't going to qualify for financing, but they would love a family to go in there. So what are our options? So we set it up with a renovation loan, and we pre-approved a great couple. The price was at a premium because there was a bunch of work had to be done on it. And this is a couple that in a great school district, there was no way they could afford to buy just a freestanding regular home in this neighborhood. And they were thrilled. They were able to get in. We were able to include the financing to change the house back over to a 3-2 like it was supposed to be. And they were able to get in. So stories like that are all over the place with these renovation loans, where it opens up opportunity for people who can't normally get into some neighborhoods that they want to get into.
Yeah, absolutely. Being creative is definitely something that's going to what set you apart in today's market as things continue to change. You talked a little bit about, cash buyers and investors and the competition it's out there. Can you, share a little bit more about, how renovation loans are offering more options for those first-time home buyers that are out in the market competing with those investors that are trying to snatch up all those homes that need some extra love?
Yes. So there's a couple of points here. One is it has a lot to do with the seller. We really need to work with the seller on this project, let's call it, because, if the seller just wants to get out quick and they don't care what their legacy is in the neighborhood, they might entertain a cash offer. That leaves our renovation buyers competing on price because we can't close as quickly, but the cash offer usually comes in pretty low too, because if it's somebody who's a flipper, it's all about the purchase price in terms of how much money you're going to make on the back end when you try to sell it. So they might say, look, I can close in 5 or 10 days all cash, but I'm really going to beat you up on price. Whereas the renovation buyer might be able to offer something more for just waiting. We're talking maybe like 45 to 60 days, somewhere in that neighborhood by the time we get the contractor in and all that stuff. So that's one thing. The other thing is, if the seller is actually like these psychologists were concerned, because think about it, you've been living in a neighborhood for 10, 20 years, you know all the neighbors, your legacy is who you leave behind when they buy your house. This is about to become your best friend's new best friend, right? So you might not want to unleash a contractor with their schedule and their noise and all that stuff on your neighborhood, only to flip the property to who knows who. So if you care about that, and there's a lot of rules and laws around, like, you can't pick exactly who it is. And there's a lot of, realtors know good and well, like, in terms of all the different limitations that come in there. But you can generally kind of see, if you're willing to work with somebody who's making a renovation offer, it's probably not going to be a flipper, right? It's not going to be a contractor. It's not going to be somebody who's just going to raise the house and try to flip that thing. So it has a lot to do with the sellers and what their temperament is and what their patience level is with regard to working with us on a renovation loan.
And I think that as professionals, especially too, there is stuff that you can do yourself, right? We talk a lot about, all these investors coming in and, what we can do to help more first-time home buyers. And so being an advocate for those first-time home buyers and working with those sellers, yeah, hey, it might be a longer closing. However, to your point, you're adding to the community and you're adding, value back to it, right? You want to make sure that you're living and adding that sort of community value back too. So,
and it's not that much longer right now. It's and if you kind of think about the trade-off between limiting yourself and saying cash only, right, to opening up the opportunities for people to say, we will take, we're open to taking offers from anybody, but if you're getting a loan, here's the name of a great lender who can do a renovation loan for you. We work a lot with listing agents. We're traditionally, the lender works with the buyer, right? But when you're getting a property listing and someone's talking to you and you think it's eligible for a renovation loan, that's the time as a listing agent to reach out to your favorite lender and say, hey, I've got this property coming on the market. What would this look like? What can we do to prep this house for a renovation loan? What kind of reports can we do? What kind of background can we do? What can we do to open up the spectrum of potential buyers to get my seller really what they're looking for in terms of purchase price and not get beat up by an all cash offer?
Yeah, great segue to a next question. Advice and resources that you would give to real estate professionals to incorporate some of these renovation products into their businesses, and to have those discussions with their buyers and sellers when it comes to these types of products.
Yeah, so talk to your lender. Probably everybody on this call either has a lender or gets called by a lender every day or something. So if you have a lender who's your favorite lender, do they do renovation loans? Do they have experience with it? First one I did was in 2011, and it was a nightmare. The last one I did was about 6 weeks ago, and it went super smooth. So it's a very unique product. It has a lot of its own requirements. It has a lot of its own, there's two sets of underwriting that happen on these loans. Your traditional credit, income, and assets with the borrower. And then there's a whole separate track with the contractor. Got to be a licensed contractor. We need, a bunch of information from them, their insurance. We check their references. There's a whole separate thing. Lenders employ ex-contractors as their contractor underwriters on these renovation loans. You guys will send out a HUD counselor that's assigned to the property. They're going to go meet with the borrower and say, okay, here's your checklist. Wait a minute, I think you forgot these 5 items. Make sure these are included. So there's a whole team that works together on this. And if you don't have experience in it, it can be pretty rough your first time out. So talk to your lender, see if they have experience in it. At our company, we've done, as a company, Cross Country Mortgage has a specific renovation team that takes over these renovation loans and takes them from start to finish. Works with me, works with the borrowers, makes sure everything's I's dotted, T's crossed. And we've done over 1,500 renovation loans at the company, right? So you gotta have that experience. That's resource number one. And then there's a ton of stuff that you guys have on your websites. There's a ton of stuff that lenders should be able to answer all the questions about what needs to be done to the house. What are the must-have items? What are the, things that we can have as optional items on there, depending on what it looks like. And to the realtors out there, the one thing that I've seen is that we are seeing multi-generational families who are comfortable living together, right? So it's a cultural thing a lot of the times. Multi-generational families pooling their resources to buy a house together, use a renovation loan, and build an ADU on site for mom and dad or for the family and put mom and dad in the main house. This expands their ability to buy. If you're just working with the kids and their limit is, let's say, $700,000, you bring mom and dad to the table and say, why don't we buy a multi-generational home together with a big lot and put an ADU on it with a renovation loan? All of a sudden that budget balloons up significantly. So there's a lot of opportunity here to kind of think outside the box and take advantage of this.
Well, absolutely. We got a question in the chat here. From your experience, what renovations give the best bang for the buck on the return for investment? Upgrades to bathrooms, kitchens, putting in that pool, solar panels. What would be your your experience?
So, general rule of thumb, it's stuff inside the house. You can include landscaping, you can include a pool, you can include the most amazing garden you've ever seen, but it's all square footage and kitchen and bathroom, right? Those are the big 3 that give you the most bang for your buck. Is if you can add square feet, if you can go from a 3-bedroom, and you guys know from looking at comps all the time, if I can turn a 3-bedroom 2-bath into a 4-bedroom 3-bath, what does that do to my what does that do to the value right there? You want to be mindful of the neighborhood, right? You don't want to all of a sudden put a 7-bedroom house in a 3 to 4-bedroom neighborhood. But in terms of getting bang for your buck, you want to focus on kitchen, bath, and square footage. Those are the big 3.
Another question. Renovation loans to build an ADU as a new option. They were recently told that they couldn't use a renovation loan for an ADU. Can you shed some light on that?
That's exactly what I was talking about. The lender was not aware of the Freddie Mac product, right? So that's the thing, is if someone is locked into thinking it's 203K equals renovation, then yeah, you're not going to be able to do that, because FHA's rule is it has to be attached to the house or connected by what they call a breezeway or something like that. So you just aren't working with the right lender if someone said no, because it absolutely is allowed. And the only exception I can really think of is if it somehow, for some reason, there's some kind of property line, boundary issue, zoning,
Yeah.
boundary issue, whatever. Every single home in California was upzoned to a 4-unit property by the state. And when we were down at Long Beach at the CAR convention, I was talking with some people down there from the state who I was on a panel with. And I said, what about a HOA? Let's say there's a gated community. You're telling me that you can all of a sudden throw 3 units? And they said, supposedly, yeah, you're supposed to be able to do it. But there are local ordinances of zoning that there's a little bit of a fight in some places about this stuff. But in terms of a blanket statement that you can't build an ADU, that's absolutely not right.
Good point. Good point. Next question. Average closing for renovations. Someone saying that they thought it took anywhere between 45 to 60 days. From your experience, what do you think the average would be?
Yeah, that's about right. And it has everything to do with the prep, because if you think about it, you see it, let's say you're working with borrowers, you're taking them around, all of a sudden you see this property. Offers are due next Thursday, right? Well, what are we going to need to do to get a renovation pre-approval? We've got to get a contractor's bid, because we don't know what the package price is. We know what we want to offer for the purchase price, but really that full package is going to be the important thing. So we've got to get a contractor, we've got to get them in there, we've got to get a pretty detailed bid. Initially, it doesn't have to be super detailed, but we need to know that ballpark number and see if the borrowers qualify for what that target amount is, right? To do what we need to do to that property. Will the seller allow the level of inspection that's needed by the contractor in order to generate that bid? If it's simply some fixes and cosmetic stuff, not a big deal. What if we want to do something major? What if we don't know what's behind the walls and we're afraid that if we open it up, there's going to be a bunch of dry rot? It could double the bid, for example. So there's a lot of little variables there that come into play. If we have a seller that's willing to work with us, we have a contractor lined up, we have all these things ready to go, then it can be as little as 30 days. But generally, what happens, the reason that it's 45 to 60 days is once you get into contract, is that first 2 weeks is the generation of this bid, discovery, all that kind of stuff.
Yeah. Awesome. Well, I really appreciate you being with us today. I'm going to close out with some resources that we have here at Freddie Mac, but I'll leave a little bit more. So if you guys do have any additional questions, please continue to put them in the chat. That way we can cover those. But I'm going to go back to my presentation really quickly just to share some additional resources that we have here at Freddie Mac that are designed to help you and your home buyers, achieve home ownership. So the first that I'm going to talk about is My Home. My Home is a consumer-facing website. It has provides answers to questions related to home ownership. It has videos, infographics, quizzes, calculators, anything that you could learn about the home buying process. It's not branded. Again, we can't sell anything directly to consumers or to you. So it's a great pressure-free place for people to go explore, get some answers to questions that they might have or might be too embarrassed to ask. It's a great tool to use after an open house. If you want to send it to some people who are kind of just going through, being those looky-loos, maybe you'll, share this with them. They'll start to explore home ownership for them and reach back out to you to make a deal. It also has information for people looking to rent, refinance, or even sell their home. Also has some great resources for sustainable home ownership. So if you might have a potential buyer or a potential owner who might be reaching out to you, needing some, foreclosure prevention information, it's a great tool for that as well. The next we have our Credit Smart Essentials. So at Freddie Mac, we find that financial education is in dire need right now for a lot of first-time home buyers. So Credit Smart Essentials is free financial education. It offers, buyers information on how to kind of take ownership of their credit. It's going to teach them how to become better money managers, create savings plans, budget. And it's not just for home ownership. It also teaches people how to save for college, save for retirement, car loans, all sorts of things that will help get people on track for, again, home ownership, because that is the goal. We have Credit Smart Homebuyer U. It's free as well. It's also available in English and in Spanish. And this is the home buying process. So it's going to start to finish. A lot of buyers have questions on, why is this person asking me to provide these documents, and why is this needed? And this person hasn't reached out in so long. So a prepared buyer, educated buyer is the best buyer to work with. So free home buyer education is available here. You might be using a low down payment option that requires homebuyer education. This does reach the guideline for anybody who's looking for some homebuyer education. So I encourage you guys to share this with your buyers and be able to get them on the path to feel empowered to take home ownership to the next step for them. We also have Credit Smart Coach, which is where you as a real estate professional can become certified to teach Credit Smart in your community. It's free to get certified. It kind of morphed over the last years. If you've heard about Credit Smart Train the Trainer, this is new. This is Credit Smart Coach. It is kind of a hybrid course now, where you do some self-paced guided lessons on your own, as well as some live webinars that you participate on that are required. We are hosting about 4 different trainings every year. So I encourage you guys to sign up for our professional newsletter in order to stay up to date and when those courses are going to be available for you to become certified to teach Credit Smart Essentials in your community. How you can sign up is by visiting our Real Estate Professionals Resource Center. We share a lot of news and information. We educate, obviously, housing counselors, lenders, as well as real estate professionals. This is the real estate professional site, right? This is going to be all the news and information that you want from Freddie Mac through the lens of a real estate professional. So you won't be getting any sort of trainings on our technology, because that stuff isn't really relevant for you. You want the latest and greatest through the lens of the real estate eyes. And so this is where you want to go in order to gain information on that. So take out your phone, scan it, sign up to get all the latest and greatest that we have offering from Freddie Mac. And then lastly, we would love your feedback on this presentation, right? We are always constantly updating our trainings and technology to be able to make sure that we're providing you with relevant topics that you want to hear about, that you want to learn about. So please fill out our survey here. Reference the name of the title that we did it with the LGBTQ plus Real Estate Alliance today, so that we can make sure that we're providing relevant information and training that's going to be knowledgeable for you to then go out and reach those home buyers to make home possible for all of them out in the market today. So thank you so much. I'm going to turn the call back over to Rod and Anthony to see if they have any closing comments or remarks while I check the chat one more time.
Well, Monica, thank you so much. That was really interesting. And actually, as an insurance guy who doesn't deal with this every day, I think you made it very, very digestible, and certainly learned a lot. And Anthony, I'm going to pass it back to you.
Yeah, no, I just wanted to, give me 1 second. I just wanted to give everybody a reminder that there was a lot of really, really good information in the session today, and this is going to be recorded. Everyone who attended, I will send you the link, the YouTube link, so you have it and you can review back, because there was some really good information. I was taking a ton of notes on my phone. Definitely fill out this survey for Monica. That would be super helpful. And stay tuned for more amazing education and networking opportunities. Our next event, February 1st at Connie and Ted's. It's next Wednesday from 5 to 7. Everyone's invited. It's going to be a lot of fun. If you're not a member, it's $20. If you're a member, it's free, plus you get a drink. So we hope to see you there.
Yes, and make sure that you RSVP, because we want to make sure we have enough oysters.